Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.
Happy Friday. Welcome to another episode of the Tech Behind FinTech. Really excited today. Joining me is my guest, Jon Fry, CEO of Lendflow. Jon, how are you doing today?
I'm doing great. Feeling good. Glad to be here. Thanks for having me on.
Before we jump into it, right, we're going to just do some housekeeping. We are streaming live from LinkedIn and YouTube, also streaming live from the Tech Behind FinTech.com. We also have a stream going from Instagram, but it's just showing me on Instagram. So please go to our website and you can see both me and my guest. So to do my guest justice, let me introduce him formally, and then we're going to get into the show. Jon Fry is a seasoned entrepreneur with extensive experience in the fintech sector. He is the CEO and founder of Lendflow, a company that provides embedded finance infrastructure for fintechs, lenders, and vertical SaaS companies, enabling them to build, embed, and launch credit products efficiently. Before establishing Lendflow in 2019, Jon founded Channel Growth in 2014, a firm specializing in loan originations for financial service companies, and Quickline Credit, where he developed technology for underwriting and laid the groundwork for Lendflow's current platform. Jon holds a master's in professional accounting from the University of Texas at Austin and studied international tax at the Chinese University of Hong Kong. His academic background, combined with his entrepreneurial ventures, has equipped him with a deep understanding of the financial services industry and the technological innovations driving its evolution. Under Jon's leadership, Lendflow has become a market leader in embedded small and medium business lending, securing significant investments to further its mission for democratizing access to capital for SMBs. His commitment to leveraging technology to streamline financial processes continue to drive Lendflow's growth and impact in the fintech landscape. Jon, welcome to the show.
Hey, great to be here. Thanks for the great intro. Lots of stories there for sure. So excited to dive into it.
I love it. I love it. So today's show title is Embedded Lending Revolution, how agentic platforms are transforming credit. So, overall, everyone is talking about AI, and now we have agentic AI. Let's start off by just getting into that, because I know we're gonna bring it up a lot. So let's just set the foundation of what is agentic AI.
Okay, so this is some have a really passionately held opinions, strongly held opinions on this one. For me, you less so. When you're really focused on the application, it's like the definitions mean a little bit less because you're focused on just how can you extract as much value as possible from this new technology and eliminate as much waste and inefficiency in the process. And so my definition is really built around that. And there's just different levels, right? So agentic is just the technology having an agency to problem solve or to automate. Right. And you can have different levels of agency. Maybe you just use it for a little part of the process, but over time you try to make it more and more agentic, make it have more and more agency. And that can go into recursively making and improving it better, but I don't feel that's required for some it is. I think it just need to be incorporated into the architecture of what you're doing, and it's providing automation and providing value and eliminating waste, and like the outcomes and the output are what make the technology implemented within the workflow or the process that make it agentic, right? And you may have it a little bit agentic, just a little bit, or you could have the full thing, but I don't think you need the full end to end for it to be agentic. That's how I look at it. We look at it but don't really spend a lot of time on that, because rather than definitions and theory, we're really focused on applied AI and the outcomes, the performance.
Okay, no, that makes sense. To know, like, as we get into the embedded finance, which I want to understand that also. It was an analogy I heard about agentic AI. So just to help the audience understand it, right? If you look at a restaurant, right? And we go there, like traditional, right? We go to a restaurant, we say, this is what I want to eat. The waiter comes out, gets the order, goes back to the kitchen. The chef makes the food. The waiter brings it back to us, right? Traditional, right? And this is a really cool analogy. Now, if we take that, because everyone eats, right? Everyone's eating at some sort of restaurant. So
That's right.
if we take that now and look at it from an agentic process, right? There's no waiter anymore, right? The data is, we understood, the data is our dietary restrictions. So what are we allergic to? What can we eat? What cannot, what can't we eat, or whatever? They have that. Now this agentic process, right, takes all that data, right? They go in the background with their whatever robots, make the foods based on our dietary restrictions. So now they're making decisions on top of that. We're not even saying we want the steak, whatever. They know. They're like, oh, they're going to do all that. And all of a sudden, when they're done, right, the process, now they bring it back to us and now we're eating it. So the whole concept from what I was hearing was like the ability to take this information and go make executive decisions based on our requirements, right? And bring us back the end results. Now, high level, right? Now, so like that concept of the AI now taking, based on human criteria and requirements, but actually making the decisions. And I wanted to mention that analogy because now when we start getting into credit, to seeing how is that applied, right? Especially, and for those that don't understand embedded finance, let's get into that. But what do you think about that analogy in regards to going into how it's used for credit? Obviously outside of food.
It's a great one. I agree. If you'll, I'll bring it back to the lending workflow. I'll make it a lending workflow first in the restaurant context because it is really good, right? What I would do is look at the full workflow of you, like even finding which restaurant that you'd like to eat, right? Let's start there all the way until your feedback about the restaurant after you've left. I'll extend out that workflow because that's very analogous, right? There is AI identifying you as a target prospect and bringing you in potentially, right? Based on a bunch of metadata that's been gathered on you on some other apps that you're using or your historical preferences based on an app or through your phone or however that data is being gathered, right? That's one touch point where AI can be applied. Then when you walk in, okay, there's another touch point. Where are you going to be set? Right? Is making that decision. Is it looking for additional context and asking you? Is it just deciding, well, the last 7 times he went to restaurants, he wanted to sit in the back left corner with the window seat, so they're going to automatically find that. That would just be increased agency for that touch point, but not required, right? It could just ask for your context and input and then use that to go place on this day where you'd like to eat. The next one is what you're going to order, or is it taking your order for you? Right? How is it asking you modifications? Is it asking you additional context to improve the order, right? Based on just what you said. Maybe you say, I want the steak, and they say, okay, well, you usually want that medium rare. Is that still the case today? How about your guests? Do they also want medium rare? Today, we don't have the data or context on them, right? So there's this process through each step of like maybe gathering additional context or using and pulling from context that is out there already, right? Then you get who's going to cook it, so now that order goes back. Is that also AI going to cook that for you? How are they going to make it? Do they need additional context based on you to cook it the way you like it? Are they going to pull from some other sources or other customers similar to you and try to make it that way? That's another touch point. Then you eat your food. right? How about if you need more water, if you need a servicing while you're eating it, if you need it recooked, what context, additional information, then you're finished and you pay, right? They're taking your pay. How do you like to pay? How to make that really efficient? Are you going to use Apple Pay? Are you going to use your watch to pay? And then leaving the restaurant, how are you going to give feedback and context about your experience so that potentially it can automatically make improvements for the next time you visit or any customer visit, a customer likes you visit, right? There's many different touch points through the process. For me, you don't need to implement AI at every single one to be able to call it agentic, and you shouldn't really. You start with the lowest hanging fruit, and then you work at each touch point, and then you try to recursively make each of those better in an automated way. Again, but there has to be humans sitting behind this auditing and monitoring, and they can step back more from the process over time. They shouldn't be removed from the process anytime soon. That oversight is incredibly important for the feedback loop that improves the AI. Humans are an incredibly important part of that process. And so what it means is these are force multipliers for the humans, because now it's more efficient for them to review all of this data because they're not having to do all of the manual steps in the middle that are lower value activities that can be automated. And now all of a sudden you have a lot cheaper food, a lot nicer accommodations. Now all of the experience is better for you, and the people working there can work on higher value activities as far as improving that process. But really, you need to draw it out first, identify all those touch points, and then, baby steps, one step at a time, go through each one. It's the same in lending. From when you want to take in potentially, you're thinking about a loan. How is that happening? Is it brute force where you're just advertised? Well, that's how it was before. Wouldn't it be better if that wasn't the case, if you weren't getting blown up with ads all the times, because AI can take that frustrating part of the experience out of it, because they can recognize by context you're providing when it's the right time and place for you to take a product, and the product that presented is the right one, and you don't need to analyze 20 different options and 20 different lenders, to get the best decision. What if that information asymmetry could be removed? Once you're applying for the loan, what if, regardless of the size of your company or the amount of your income, you still got the same great white glove service? Right now, resources have to be allocated based on the value of the loan and the revenue that it's going to generate. And that creates different experiences for different segments, which isn't great and can be really frustrating, especially because if you want to be a big company, you got to go through the steps of working your way up there, right? And there's many great people with great talent that, get tripped up in things like this where otherwise maybe they couldn't, or they won't. So I'll stop for a second. Yeah, come in here.
So I love it, right? Everything you're saying, yeah. And I want to break some things down for the audience, right? Like the one thing you said with the lending flow is the data. The data improves the experience. So back to the agentic part, right? In order for any AI system to work, it needs underlying data. The garbage in, garbage out, something we always say, right? So
that's right.
The quality of that data is important for the decision making, for the analysis, for the next step, right? The next thing you harped on, because a couple of key topics, and we're going to go in we have time, so we're going to go different directions, and sure. I want to touch about the conversation. So one is the data. So let's table that, because that's going to be a topic. Two is the whole concept of everyone talking about, is AI going to replace me? You touched on that. You said, it needs some human, it needs the human auditing aspect. It needs the human aspect. I want to touch on that in regards to lending, right? As you were also mentioning now, you talked about the process of iterating over time, not big bang. So the concept of we're not going to try to boil the whole ocean. We're going to try to automate something small, and then we're going to grow from there. So
that's right.
That right there, and I'm sure we're going to come up with more, but those are 3 points that now we could expand on to help the audience, fully understand. But before we get into those 3 points, right? Can you help us understand what is embedded finance?
Sure. I mean, it's great you bring it up now, because it's perfect segue from, what we just discussed. It's solving that initial problem of identifying when it's the right time and place for you to get a financing product, right? Just think about yourself. Everyone's done what? A car loan. Many people have done, mortgages, right? So do you want to be blown up with ads for getting a car loan every day? You're getting text, you're getting emails, your ads on the TV, it's on the, right? It's all bombarding you, right? That's not, and when it's happening across many products, it's not a great experience. And the goal kind of there is actually put it in front of you as much as you can to subconsciously finally get you to just go and make that decision. But for most people, that's a frustrating experience, and one where embedded lending plus AI, both of those, especially as a combination, can really help to solve that problem, to make it a great experience. Because if you walk into the car dealership, isn't it, that's when you want to be presented the loan options because, hey, you're ready to buy a car, right? If you're getting it paid for a project, for an invoice, all right, I have this invoice. Maybe I want to get financing to advance the payment on this invoice at that exact time I have it, when maybe the data is known that you have 3 other projects you could take on. If you can get paid 30 to 90 days earlier, you can accelerate the timeline of taking on new projects and buying all of those supplies. And guess what? When you go to buy those supplies, right in the place that you buy them, you can click a few buttons and finance them, so you can spread out that cost over future time. So maybe you can take 2 projects instead of 1 because you've spread out the payments against those, right? And you can, again, this can help you grow faster, but at each place, there's a product that specifically can be used for that. It's the best product for that. So when you're doing those actions, when you're buying the equipment or the supplies, there's a great financing experience that's quick, easy, fast, painless, low cost, right? That makes sense. And it's just when you need it in the right place at the right time. That adds reduces a lot of waste. And then guess what? That's going to also give you all that data and context can be fed into AI to do this even better and more efficiently. Again, they build off of each other. And then all of a sudden, the cost of capital continues to decrease and go down, and more people can gain access because the processes that go into all of that are so efficient. All of a sudden, the market opens and more people in the higher risk credit spectrums have access to better and better products at a cheaper rate, and the people at the top do too, and it goes all the way through. So while expanding the growth of the business, and now they can reinvest and companies are doing better, and so it has all these second order effects as well that are very positive.
So from an embedded perspective, right,
Mhm.
it's looking at the financial products exactly when you need it, while you are doing something outside of finance.
Correct. That's right. That's right. I mean, it doesn't have to be like that. Again, just like the other example, that's the end objective, but there's paths to get there, right? There's steps you can do to iterate your way there. And we're talking about the embedded lending revolution, but I remember reading about embedded lending and embedded finance back in 2014, maybe when Square launched their first program there. And then over the years, more company launched it. It got really popular 2018, 2019. But it's still truly, relative to what it could be, still, I'd say in its infancy. There's still so much more potential to go. Yep.
From a conceptual standpoint, so for someone who's never even heard of this concept of embedded finance at all, from a conceptual place, right? Like, because you mentioned, like, we're talking about going in that process, for example, when you are actually buying the car within the dealership, you are presented with financial products to help facilitate that loan. That's an example of embedded finance. So basically, outside of the bank, right, the actual business, in this case, it's a car dealership, has financial products embedded inside of it that you can now take advantage of at the point of sale. Is that accurate?
Yeah, that's exactly accurate. And to take it a step further, like what's the real first one? We'll look at e-commerce, right? They're in a workflow to buy, and now when they're going through in the checkout experience, now you can finance those payments. Now you can finance the payments of airline tickets, of Ticketmaster, of buying concert and show tickets. You can really, when you're going through an e-commerce flow now at the point of sale, you can determine, do I want to spread out these payments over time, for whatever reason? Maybe you want to, be able to do more shows, or maybe that fits better in with the way that you get paid, right? And it's going to be more convenient for you to make those payments, and the cost for you to do that is worth it to spread it out. Maybe you have a good, investment. You don't want to liquidate some stock, so you think it's going to go up more, but relative to the interest. But that's another really great example that more people know, and that's the one that's really worked well in consumer finance, with companies like Affirm and Klarna, Afterpay, and all of them.
But similar concept in a sense, right? You're going to
That's right.
shop for a new stove, for instance, right? For your home, right?
Yep.
And you're going to, I don't know, you get in this stove from Home Depot, for example, right? Random. But now at the point of sale of getting the stove, you are presented with a BNPL solution, buy now, pay later solution, right? But that actual solution is coming from a financial services firm that has absolutely nothing to do with Home Depot besides that product. But from your perspective, you are at Home Depot site. Your Home Depot's, it's shielded to you exactly where this financial product is coming from because it's embedded in Home Depot site. And now you can take advantage of that particular financial product outside of a traditional bank or lending institution.
Yeah, that's exactly right. And point of sale is one touch point, but there's many types of touch points. It could be the point at which you get paid, or the point that you generate an invoice, or the point when you're going to, buy a piece of equipment. That's still point of sale. But there's a lot of different touch points where financing could make sense. When you win a project, right? So depending on the business, those touch points are going to be different. You talked about restaurants. Is it when you're ready to expand? Is it when you get to, you want to buy some new automation to try to do the flow that we discussed a bit better and automate more? And there's some, capital expenditures for that, right? There's all these different touch points where it can make sense. Point of sale is a great one. It's the best first one, but there's a lot of different ones, that can happen over time. And you just have to break down the business itself or the workflow of the user itself to really determine what those are.
And to drive it home for like people with like a small business, from their customer perspective, would it appear that they are the owner of this they are providing the financial services solution?
Maybe, right? It just depends on how it's structured. You can have it that way, but there's like compliance, and there's, depending on the state, you may need to be able to do that differently. Who's the lender of record? Is it you, or you have to make sure that you set it up so all the disclosures are clear. And that's different actually state by state. So you need to make sure, like, depending on where your customers are and where you're going to be serving, you're compliant with all of those. If it's that fully white label, there's also co-branded where you're doing it together. There's also just embedding that lender and making it very clear. All of that's still embedded lending. There's just different flavors of all of those things, and you have to make sure you're working within the framework of, the guidelines that are in place by the, by the state and federal governments.
I think that's cool. See, I love it. I think we set a good foundational stage for agentic AI, and now we had 3 threads we're gonna talk about. Now we set a good stage for embedded lending. I think it's clear. And listen to the audience, right? If anything that we're saying is unclear, please hop on and ask questions, right? This is why we're here. This is a conversation that we all can leave better from. And our goal right now is to set the foundation, because we're going to start getting deeper into the embedded finance revolution when it comes to lending. But I wanted everyone to start from a foundational place to help to further understand this topic. All right, excellent. So now we understand embedded lending. Now let's go back, right, to our initial 3 threads we talked about in terms of data quality, right? Yep. How important is that, and how does that process work? in terms of from a lending perspective to leverage the AI, obviously.
Yeah, it's extraordinarily important, right? Because the data is what becomes the memory layer, right? For the AI, right? And that's also how you're going to tune it potentially if you determine to go that direction, if that's a part of the architecture that you've built, and there's some component within that where you want to tune a model for a specific purpose. There's lots of great new tools coming out for that, and so it's already extraordinarily important now. It's only going to get more important over time. And a lot of the legacy systems and data stacks no longer are optimized or, for this purpose. Right. And so there already is, but there's going to be an acceleration of what is the new data stack, determining what that is, and then implementing a data stack that's optimized to for the AI to be able to get the most value at it at the lowest latency possible. Right. And those are two of the levers that are very important there. So it starts with how you store the data, and that you make sure that the data is clean and that it includes enough relevant, metadata about the process that is not data loss. There's a lot of data being generated at each step, and the sequence and the order of steps and the timings and the dates, timestamps, right? And all of the other relevant context about when that decision are made or when that data was generated, what stage of the process, what browser they were using, what kind of device were they using for like the loan application process. At each touch point and stage, there's all of this data. You need to make sure it's clean, right? It's stored well, it's stored in the right type of storage, and then it can be accessed quickly, right? Is it a normal database? Are you gonna also use a vector database? Are you going to use a graph vector? Because there's lots of relational elements to the data that you want the AI to be quickly able to call out to and see those relations quickly, incorporate that into the context of the activities that it's engaging in. Setting all of that up is very foundational. And so you're going to see companies, there's already those that are doing this is transitioning from the legacy data stack of old to a brand new data stack that's for the future. Right. And, for us, it's extraordinarily important. That's a priority just because of how foundational important that this is. And I can give maybe some concrete examples from lending if that'd be helpful. But yeah, any questions or anything deeper you think the audience would be interested in there?
Basic stuff, right? Before we get into concrete examples, when you say clean data, what do you mean?
That the data is in a format and a location, and that it's accurately represented for how it was generated within the workflow, within the process.
And people might not understand metadata, but I always thought about, and correct me if I'm wrong, I always thought about metadata as data about data, right? Like literally like just those points to understand. You might say metadata and things of that nature, and I just want people to have that understanding. So now that we have that, you mentioned some concrete examples. Please elaborate.
Certainly. So we talked about those different touch points in the process, right? So let's talk about maybe doing outreach to a customer and having a conversation about the loan products that are available to them and which ones are the best fit, right? So you would want to know that AI agent, right, is going out and having that conversation, right? You can't just stuff the context window with all of this information from everything at once, right? Or you can, but you're less likely to get the quality output that you desire for each stage of the conversation, right? At each stage and in each kind of hub or sub agent, there's going to be specific tasks and calls that are going to be made out to data and to tools to take actions. And if the AI has access to too much, well, the quality can decrease, right? And if there's too much data, then you could break the context window, you could exceed the context window, and then it'll just start hallucinating and give really bad output. Right now, the context windows are getting very, very large, up to 1 million tokens. So it's getting less, it's requiring more data to create that situation. But when you're talking to a customer, what industry and what business do they have, right? What about the communication layer from everything within this lending application flow has happened to this point? What time did they apply? What kind of company they are? What business are they? What AI has gone out and enriched all of that information to get additional information about how the business operates specifically? How can you incorporate into the conversation so it's intelligent and the AI knows that like a very experienced human would, who's worked with customers in that industry for a very long time and understands those touch points of the business where financing is going to be most relevant and important, right? If the AI is just getting on there and it's like, hey, finish your application. Okay, well, but what if it's talking intelligently about your business and the touch points, and it knows just from this application and all the context and input that's been collected already, that's been gathered from the market, it's read all of your reviews you've ever had from every source that it's available out there on the internet about your business. It's read your entire website, right? It's gone out and it's read what people are saying about you. It's pulling from third-party sources to better understand your business model, your location and geography. It's understanding that. So it's all this great information, and then all the communications, the text, the emails, the voice. If you already had a conversation yesterday with a human, can it reference that conversation and speak to it, right? What about an application you applied last year and you applied 2 years ago? Because you're constantly applying. What about pulling in all of that information and context? You can say, hey, last September, you applied for a loan. You moved forward because it was for a new project you were taking on. Hey, how did that project end up going? Was that product right for you? Could also say you didn't take the offer because you said it was too expensive relative to the profit margin that you were looking to generate. We talked about strategies of how you can improve your product to get a lower cost of capital. Have you been able to implement those strategies yet? Right? Are you ready? Do you have a new project that's going to bring in more profit for you where this makes sense? Right? What's the information? So you can talk about the current situation, but also talk about past situations and, help guide them to take steps of how they can improve their credit profile to be approved for lower products. So there's more use cases where they can access and leverage capital for those use cases. So yeah,
it's like having an advisor that is extremely into you. Like
that's right. There you go. That's the dream. That's where we're going. That's right.
Like to the point, background checks on you, research everything that you've ever written online, research what people are saying about you online, research all past conversations you had with our particular entity that we have access to. And not only that, we have so much foundational information about the industry, about the different products and so forth. Now, based on all that, we can basically give you the best case scenarios that you can use for this loan because we have all the information. So what we like to do, definitely encourage user audience participation. And Queen Lan has a question. What are the potential data sources you would suggest?
So one of the things that we're doing with our platform is making sure to get all the data in the same place and storing it consistently. But there's also third-party data you can go out to. So you need to differentiate between the two. What data are you able to collect? For us, that's a communication layer. That's all happening within our infrastructure. So those are tool calls for the agents, and also the data can be called out from any prior application information. There's also third-party data vendors that you can pull in data for as well, right? And then there's public data sources that you can go and pull out that are available on the internet. Think like reviews and things like that. So I would suggest for your use case, pulling in as much information as relevant for you get to the next iteration of the task at hand. I actually wouldn't recommend doing everything at once because there's so much that you can do. Getting back to our prior view, try to boil the ocean, right, as Namdi said, then that can cause problems, right? So I would suggest that what's the quickest time to value to reduce waste or inefficiency in the process, and then use that data for that specific thing. You can have a roadmap of many different things that we discussed and all these different data sources. Like we're integrated into 40 plus different data sources, but each one is going to be irrelevant to a specific part of the process. We don't want to pull in them all at once. That wouldn't be efficient. We'd have to pay for all of that. But in the incomplete application, maybe we can pull in some information to enrich the file, to have a better understanding of that user and their business, and to make the application process easier for them to complete, and to have a conversation with them about any concerns about the process that caused them to drop out, right? Then you look at the next touch point, and you can look at that touch point, go a step further. You can bring in all the context of past communications with that customer from prior applications, and each of the offers that were available to them at that time, and why they took or did not take each of those available options, and the reasons why for that, because that happened in a conversation. Very likely that you could have that data. So you could go really deep on each touch point, or you could say, hey, our time to value here, that was the simplest part. It's going to be less lift and time to value from this next touch point because we have this data right here. We're going to pull it in and make this next stage of the process even better before we go deeper on that prior touch point. Right. So you don't need to go all the way down. Maybe it won't be efficient, or you won't have, but you need to do the lift versus impacts for each of those. That's why it's so important to draw out the entire process, know each of these touch points deeply, and then start identifying, okay, let's in the depth of each of how you could make the experience and the process better. Right. Once that's all drawn out, then you can go through the lift impact and choose your spots and the data sources that are most relevant to each spot.
Talk about that. That's a point that you just brought up. I find really interesting. I want to learn more about it. You said you're connected to about like 40 different data sources or so, right? But for an incomplete application, you can pull. You'll see, okay, what does this application need, and then you reach out, API, whatever, to one of your data sources, based on need, because you don't want to necessarily pay for all of it. How to explain that? Can we dive into that? I just want to understand how it works.
Sure. Someone applies for financing, you're going to have at least some level of information on them, and you can use that to enrich the file with additional information, right? For example, industry, right? That's a big one because you need to understand the nature of the business and understand the likelihood of why they're applying. You're going to have context. You should have context about like this business type and what financing use cases are relevant. And also the time of year, what's the date, right? Different, sometimes for some industries, different times of the year have different use cases. Landscapers, for example, and the location. Are they up north or down south? Up north, well, they're probably doing snow, right? Removal work in the winters to bridge the gaps. That, right? In the south, they're not. Maybe they're doing HVAC because everyone's hot and they've gotten to that business because no one's going to go a day without air conditioning in Texas at this time. But there's certainly, or very rarely, maybe once in 50 years, going to be some snow here in Austin. So you can have all that context to say likelihood. And when you reach out, you can reach out intelligently to them, right? Through the means of communication, email, texts, phone, if they're in an experience, a chatbot or something like that. And you can speak more intelligently to them. You also know when to contact them. If it's a construction worker and they're on the job site, you're not going to call them at a time where they're going to be busy. You're going to trigger that to be when they're off the job site. Right? If they're in a restaurant, are you going to call them at, the busiest time of the day? Or are you going to call them at the deader hours at like 2 to 3? All of that context is important for making sure you can get the outreach that's convenient for them, that's going to be the best time for them. And then also speak to the use cases that are relevant, and also look at the place that they dropped off. Like that they dropped off is one thing, but where? Was it when they were inputting their SSN? Was it when they were updating bank transactional data? Was it at the first stage of the process? Something happened where they did not, they were going to move forward, but then didn't. depending on the place that they dropped off, that's context that's very important for the next stage of outreach. So you can understand how to frame that conversation. Hey, you dropped off at the SSN. Just want to let you know your data here is secure. We are not going to do a hard credit pull. This is a soft credit pull just to evaluate you. You're not going to have to do a hard pull at all, or depending on the products, maybe you'd have to do it later in the process, but we get your consent before that, right? If it's bank data, hey, your bank transactional data is secure. This is only used to build a cash flow profile that's going to get you better products, and data is only used for that purpose, right? And that can get them feeling comfortable. Hey, that was why, and maybe they have a conversation, explain something. That data can be fed back into the context engine that can be reviewed by a human to see if that should be incorporated to improve the agent. And maybe someday the agents just do that automatically, incorporate it, right? But I don't think we're ready. We're not there yet. But we could be. So just in a few examples. Did I cover everything? Anything I missed that you'd like me to speak more to?
No, this is great, right? So I know we said we're going to talk about the data aspect. I think we covered that. Then we're going to talk about the human factor, right? And because it's lending, I want to talk about the underwriting aspect and how does that work now with the AI systems, and what is the human involvement in that?
Yeah. Yeah, there's a lot here. So there's a lot to discuss here because there's these big misconceptions, right? I think we touched on one, I think around agentic and agency, there's a lot of different noise around that. There's also this thinking that it's a zero sum for like it's either a human or AI to some sense. There's this fear, right? And I've seen the feel internally in my own organization. I know this fear because when you don't understand the technology and how it's going to be applied deeply, then it's easy for that, and that misconception perpetuates in many other places too. And so I think the reality is that it's not actually the case. When you have additional capital that can be invested in innovation that creates more jobs, right? And creates more opportunities for human, and it creates for them to do more work that they enjoy more thoroughly as well. And so when you have that fear, and then you go in and you show and you empower your team members to use the technology to become better, right? To become more powerful, to really be able to do more, to take the less glamorous and the things that they, maybe not glamorous, but the things that they enjoy less as part of the process, and be able to shift and be able to automate that. And now they can shift focus to thinking about how to make the process better and innovating and doing higher value work and be able to process more deals. All of a sudden, they feel that empowerment, and they get a lot more joy out of their work. And so that's one really important thing. And then the pie grows, right? And then there's more things you can invest in. Your customers are happier. They're getting better products, a better experience, lower cost of capital. They're happy. Your employees are happy. You have more resources because the process is more efficient. Since if you removed inefficiency and waste, which you mean can allocate more resources to other things, and you can use that to innovate. And all of a sudden that innovate creates more opportunities for more people to come in. And so if you look at this across every single field, and we certainly see it in Linda, you can see why I think it's the case that this time isn't different. Just like any time in the past, there's a big innovation and there's this big resistance to it. It actually ultimately ended up creating a lot of value and a lot of new jobs and opportunities that were better and increased the value of the work that we're able to do and the joy in that work. So I really believe in that. I'm always evaluating and taking in new inputs, but it's just not one or the other. That being said, well, maybe you had something to say. I was going to get specifically into your question, but jump in here. What do you think?
Yeah, no, that's more of a. So here's my take on it, right?
Yeah.
Would it lead to certain jobs that were necessary being redundant? In my mind, yes, absolutely, right? Does it mean that from an employee standpoint, you have to, I heard this thing I heard somebody say something that was really interesting. You don't necessarily have to be an expert in AI, but in this next evolution, you have to be knowledgeable about leveraging the tools. Baseline. Like, for me, for right now, I'm in security. The biggest thing for me, but it's a whole different thing. So I'm more in the in working, but also in the academic space. So I'm both. So theory, but also working. And the biggest thing for me right now is research around security around AI. So that's like my thing. No one's expecting people to do that or actually build the models, right? I think that's like saying, you're into cars. Can you take apart an engine, right? No, but can you drive the car, right? Can you we went from horse and buggies, right? And no one's asking you to be Henry Ford and build a car, but do you know how to operate the vehicle? And I think that's where we're going with this whole AI stuff. And I think there's a lot of people on the sidelines that they don't understand how to operate the vehicle. Conceptually, they don't understand it at all. And that's baseline. You have to have it under, like even this conversation we had about, no one's asking you to go build an agent and then work. No, but do you understand what it is? Do you understand how it impacts your role? Do you understand how you can leverage it? That's, I think that's the denominator. This is a whole other podcast discussion on that.
Yeah,
for real,
for sure. But absolutely, there is.
Based on, so I think the fear is legitimate. I just think it could be like anything you fear, right? You mostly fear things that you don't understand.
That's right.
Whether it's people, whether it's whatever, you just don't understand it. It's the boogie monster. It's like I'm scared of it. But once you understand it, I could even take an example around, I don't know, like jujitsu. That's when we talk about hobbies. You're into basketball, I'm into jujitsu. Yeah, some people are like, oh, he's big. And once you're strangling the guy, you're like, oh, he's not that big. He doesn't know what he's doing. It's like,
that's right.
Careful. This guy came in for the first time. You're strangling the guy. You're like, oh, okay, it's not that bad. But you feared something you understand. I think that's what's happening with AI. That's like other thread, right? And I know, and I want to ask you some more questions around lending and
I got one more thing on that, maybe real quick before we go to the next one. I got one more thing, right? Because I think you nailed it, right? You just feel things you don't understand. I think the barrier to understanding with AI is quite in using it and getting value and like being valuable to the system that's being built with it is actually very low, because it's all natural language. You just say what you want. Can you say what you want and build a system? And if I don't know how to say what I want, okay, well, what are you trying to accomplish? And we'll have an agent built for you that will then translate that into a spec of like what you need to get done and create the prompt for you, right? As an example, because it's natural language and you're just telling it and then this output is being generated for you to review, right? I think the barrier for learning that is quite low at the basic level, and you can get more advanced, but to be a valuable part of the process, it's much more important for you to have industry expertise in a skill like where you can understand if the quality of output is really good or not, right? If you understand and you've learned a trade or have special experience, that's more valuable, because I haven't seen the people have difficulty picking it up, right? It is the barrier to like getting good is quite low. And the other thing is, lastly, is you don't need to change anything about your process, right? I actually don't tell lender, don't change nothing. Do nothing. All we're going to do is add the AI upstream, right? And it will package and prepare and do a lot of things. And then it'll get to your team just like normal. And you do your job like normal. It's just that everything's going to be packaged and better. And if it's not, here, write this note here in this spot of like what went wrong, what's wrong, and why. And then feed that feedback loop back into the team responsible for improving, the agentic team, the engineering team, whatever team you have doing that. And they can go in and feed that and make that better. Right. But change nothing about the process. But all of a sudden, Their process is a lot more efficient. They have a lot more manual work. Oh, I don't have to transcribe the information. I don't need to write the credit memo. It's already here. I just need to evaluate it. Oh, I don't have to put this into an Excel sheet and execute a model and look at the output and plug that in manually, right? It's all just here for me now. And now I can focus on evaluating its quality, right? And right? I'm not, is it high value transcribing information from a document and putting it over here? Like, no, now you can focus on the higher value activity, use your skill and expertise. And all of a sudden the origination and the amount of applications you're able to process is, 2, 5, 10x of what it was before. And you're doing more enjoyable things and using like the skills and expertise that you have in a more productive way. So,
and I want to touch base on some stuff. I want to give some stats. For some reason, I really love stats. I don't know why. Sometimes people can use stats for however they want to, but I want to talk about some stats and how it's related to embedded finance and how you kind of look at what's projected. So one stat I read: over 60% of small businesses are now funded through non-bank channels. Right? Based on that, where do you see embedded finance going in the next 3 to 5 years?
Is that a particular size of business, or is that across the board?
That's a good question.
I'm curious if that context is part of the data.
Yeah, it's from the Fed in 2024, and it said small businesses. So just across the board, I would assume.
Okay. There's maybe some definition of what a small business is for that data. So I always like to look into that and break it up by segment. It'll be interesting to see. Are private players going to come in and be able to use this technology to issue credit more efficiently and gain distribution more efficiently by embedding these products in those touch points that we discussed more quickly than banks? I think that that's likely to be the case. How many banks are going to be, because they can move faster, they're more nimble, right? And banks have more regulation. There's more red tape. There's bureaucratic, processes. There's many in place for a good reason. They move slow. They're conservative in many cases. And so I think it's more likely that trend continues, but the banks are going to have access, and they have a lot of advantages too. They have access to low cost of capital. They have a lot of the customers. They have so much data. Are they going to start adopting all of these tools when they're mature enough? And are they going to be able to start to move in that direction? Do they even want to? So it'll be interesting to see. I think the opportunity is there for them. I probably would lean in the direction that private credit would come in and move more quickly on this opportunity and grab more of that market share, especially for down market. I think banks are probably going to continue to serve up market, these very large, big transactions still, because there's less of them, fewer of them, and less reason for automation to come into play. Right? Because there's very few, very large deals. And that is not as much value to provide to part of that process with a lot of these automations. So I think there's more value to provide the kind of the smaller the segment is, firmly that entire SMB segment. But I would think that they'd be quicker to capture the opportunity and the distribution. Both of those, operational efficiency and distribution, say efficiency. I think they'll capture those two key elements more quickly, but we'll see.
Another stat: lenders using automated decisioning see 30 to 50% lower default rates. Find that stat interesting because it's in line of what you said, right? If this advisor kind of scoured your entire background, all your information, and then they went through that decision at that time to get you the best possible loan, I can see how this, it's interesting to hear stats, but then to relate it back to the conversation. What are your thoughts on that?
I got a few. I would want to dig into that, right? Because you brought up something very important. I think you're spot on, right? It's that the additional context around the speed is important too. Right? We talk about data, metadata, right? Like, How fast was it? How fast was it relative to other customers? What technology and data was pulled in to make those decisions? Right? What is the type of product and how is it being used? What audiences are being targeted? Right? What credit spectrum? What part of the credit spectrum is being targeted? All this data is really, really important. It's also really important to look at how else that data is being used downstream as part of the process, because origination and onboarding is part of it. You're making that customer really happy. You're giving them a white glove experience. If they're frustrated in the process already, yeah, they're probably not going to think very highly of you, and they're more likely to fall if it's some manual, arduous, weeks, months long process, right? Also, like, is this technology being used in servicing? Are you looking at the bank transactional data to determine risks for not being able to make a payment or default proactively? And are you reaching out to help proactively versus reaching out when there's been a problem and now they're anxious, they have anxiety around this problem, they know they made a mistake, they're actually less likely to answer because like they know there's an issue and they know you're calling them to not demean them, but like that's how they feel. Like, hey, you messed up, right? It's very negative. You're calling proactively and you're calling to help and giving them a guide, right? That also can. So how else is the speed and efficiency and automation and data? How else is it being used in the overall flow? I would also want to look at that. So it's hard to just give an answer, but what I will say is that there's a high correlation between companies who have a very efficient, streamlined process and those that are going to be pulling in from all of the different types of data sources and applying this technology at more key touch points through the entire loan and customer life cycle. Right, as a loan life cycle of that loan, but it also is relevant for the next loan that they take and the next time they apply and the other product they want. Maybe they want a consumer product because there's both, right? And the context of the entire life of that customer is really important as well. All the past conversations, what was the sentiment? How did they go? And it's very interesting. But all that context would be important to give a concrete example, but there will be a correlation between the companies who have the capability to do that and can deliver a fast, streamlined experience. And probably that's at least some part of the equation, if not a majority. But faster, easier, happier customers. It is interesting because you'll also hear on the market the opposite. Sometimes I hear, maybe I'm very curious about this, lenders will say things like, well, if they didn't want to go through the process, they weren't really serious about a loan. So I'm glad they're out because they were probably more likely to default because they weren't really that serious about taking the money. And I always think about that. And I'm like, is that true? Or are you just justifying a process that you haven't been able to change and improve? Like, it's interesting, but you'll hear that. You'll hear justifications for why it's better for the process to be slower and more cumbersome. And that kind of makes me curious, makes you laugh. I get a little maybe chuckle out of that sometimes too.
Well, I'm going to say a stat that counterdicts that, but I also want to leave with one other stat. They say 92 from the Federal Reserve Small Business Credit Survey in 2024. 92% of small businesses say quick access to capital is essential for survival. So that totally goes against what these people are saying. But the last thing, and just more of a confirmation.
That's a great point, by the way. Like if I can use it right away, I can use it for what I need right now. I don't need to use it a month from now. The opportunity is here. It's a great point. And now I invest and get the resources and now I can repay, right? So totally great point.
Last thing, I just want more of a confirmation. They say the SBM, the small to middle-sized business lending market, is greater than 1.3 trillion in the U.S. alone. From the SBA and Fed data in 2024. Does that sound spot on?
That sounds right. It sounds more than it was. I remember looking at that data back in 2019. If I remember correctly, it was maybe around 600. So it's about 2x in 6 years. I'll have to reference that, right? Yeah. But that seems feasible. Obviously, we've had some hiccups and curveballs over the last 6 years, but still a lot of growth. I mean, and I hope to see that the SMB segment continues to grow. It adds a lot of vibrancy to our economy. So you want to see people starting business, innovating, growing them with the skills that they have. So I love to hear that growth stat. Love to dig more into that data. Right. So it's a thread to pull on.
Hey, John, excellent show. I'm going to be respectful of your time. Obviously, we can keep going on. This is fun for me.
Okay.
But one of the things that we do for our guests is we give our guests at the end of the show the stage, so you can talk about Lendflow, how people can find you, what you do at Lendflow, and so forth. So I'm going to come off the and to let you do that.
Sure. Awesome. Well, we provide embedded lending infrastructure, right? That is powered by AI. And so if you're interested in, any part of the process of driving waste or inefficiency out of the process, we're a great fit for that. Operational efficiency is key, and having all the tooling to efficiently make that happen. Right? You can do everything through our API, but also we have no code tools that you can build with. Right, that you can quickly iterate with, that you can come in, regardless of your technical expertise, you're able to get value out of the product. You're able to use our system to access the tool and the memory and the context to build these AI agents, right? Whether that's through our infrastructure and our platform or elsewhere, and bring that into the flow, into our ecosystem. Right. And then also we have tools around solving that distribution challenge. And so if you're a company that wants to embed one of these experiences because you have touch points where you can provide value to your customers, right, that can be incredibly valuable to get in touch. Or if you're a lender and you want to drive the operational efficiency and you want to be able to embed your products in these touch points, in these whether it's point of sale or an app or this software or a platform, and you want to deliver your customers in a more streamlined way where they are when they need it to get that higher quality deal flow and to scale that part of your business, we're a great fit for you as well. So we work with lots of different types of companies, banks and enterprises, like some of our great customers, BHG Financial, On Deck, an Innova company, or eCapital, or many others. We also work with mid-size and startup companies. So reach out. We'd love to help you along your journey. And it's been great being here today. We appreciate you having me on.
Sounds good. No, thanks for your time today. So we put the website in the comments and we put it on the screen so that it'll be as part of the episode for ever. That's lendflow.com. Like I always say to the audience, whether you're watching the show live today, we appreciate you, Quingland, especially the comments, suggestions, whether you're watching it on any of our platforms, whether you're watching it live, whether you watch it tomorrow or next year, we really appreciate your viewership. Want to thank our guest, Jon Fry, CEO and founder of Lendflow. Great conversation today. Also want to say that we do have a newsletter that is free. It'll keep you up to date of what's going on in FinTech. It'll keep your hand on the pulse. It's at techbehindfintech.com. We encourage all of our viewers to subscribe. And now you'll have access to all the FinTech news. You'll also have access to our upcoming guests. I'd like to also say the show is sponsored by Sweating Equity. It is a show that we have created. We have not launched it yet, but it's a show that's going to focus on the actual guest. But the twist is, we're going to be interviewing the guest under stress, under an extreme workout, and we'll be getting some information from the leaders, putting them under pressure, and also getting insights on their journey. So that's Sweating Equity. John, listen, man, thank you very much for your time today. Really enjoyed talking with you. Wish you the best on all your endeavors.
Yeah, appreciate it, Namdi. Been great to be here. Anyone, feel free to reach out to me on LinkedIn directly or to my email at john@lendflow.com. And looking forward to hear from you and excited to continue to build together. Great to chat today, Namdi. Thanks for having me.
Thank you. So to all, have a great weekend. On that note, we are out. Cheers.
Yeah, later, everyone.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.